panic in the markets over this debt ceiling. I don't know, man. I don't really see panic in the market over this debt ceiling thing, even if it does come closer. I think a lot of people are of the view that it's going to get done. You know, it always gets done, and it will get done. And so I don't really think there's going to be a huge panic. If there is, that's great. It would be a great opportunity, and I'll gladly welcome that. But I just don't see it. The market is so desensitized to all these little short-term crap things. Debt ceiling that always gets done and will get done. You know, all this stuff. I mean, you know, when you've been through a once-in-a-100-year pandemic just a couple of years ago, right, 3 years ago, it doesn't get much more extreme than that. Debt ceiling after you have a once-in-a-100-year pandemic where the worldwide economy is all of a sudden closed, it's like child's play. That's nothing. Are you kidding me? Are you kidding me? That's nothing. You know, we've had to deal with, you know, obviously, you know, the first war in Europe since what? World War II? We've had that to deal with recently. Obviously, sky-high inflation that's, you know, went to decades high. That we had to deal with, right? When you just stack up the things we had to deal with, a trade war, we had, you know, people forget about prior to Rona, we had, you know, T-Man was in a trade war with other countries that was causing massive dislocation in, you know, how we were going to do business moving forward with other countries and the tariffs and all that stuff. And it was a tick-for-tack war. I mean, those are so much bigger and so much more realistic problems than a debt ceiling. And so that's why, I mean, could the market go down? I hope it does. In the short term, I hope it does. It'd be awesome. And I hope everybody panics and S&P sells off, you know, 15, 20%. That'd be amazing. Just don't see it happening. We've gotten very desensitized to these things, folks. Very, very desensitized. So it takes a lot more than that to get the markets rolling one way or another. If you ask me, why do I feel so comfortable being a JP Morgan shareholder? It's the only bank I own. Did you hear what that man just said? Man, you know, banks the biggest companies in the world. He banks governments, the World Bank, like, you know what I mean? Like, JP Morgan's one of the last stocks I would stay up awake at nights thinking about. Bottom line is they are, you know, the one that always makes it through everything and just gets stronger over time and gets stronger and gets stronger and gets stronger. And they're basically almost like a government-backed entity, in my opinion, at least, in kind of my views. And so, you know, I just always feel extremely comfortable. And when you understand, like, you know, who JP Morgan's big, huge customers are, you realize, oh gosh, they're almost like a protected whole other class of a company. You know, they suspended short selling in the great financial crisis, if I recall. And all that did, as far as banking stocks went, and all that did was actually cause more fear and panic out there. So although I'm certainly not the biggest fan of short sellers, if you've been watching me for the years, you know that. I got to stick up for them here. I don't think that's a good move. I think that would probably be a move that hurts. It would ultimately show even more fear out there, right? And like I said, they tried that in the GFC in 2008, and things just actually got exponentially worse from there. And no one was able to really capitalize on that. So, you know, that's kind of my thoughts about that. Jamie Dimon is incredibly bearish. Let's call it what it is. That man just said he would happily take a mild recession, which means if he's saying he happily take a mild recession, that means he's expecting a pretty severe recession. Okay, let's call it what it is. That is quite clear. Without saying that, that man just said that. Okay, he also did not say he would buy stocks or real estate. He said he would put his money in central banks, if I recall. Wasn't that what he just said? So that just goes to show you his thought process on his bearishness. He could say this, he could say that, but the man's ultimately sounds like a bear. Now, this is not the first time he's been a bear. He's actually been a bear for, gosh, probably about a year now at this point in time, since he did the hurricane talk, right? And so it just seems like the man is continuing on his kind of bearish views here. Now, what that means doesn't mean too much, to be honest. Obviously, we got to pay attention to it. But I think his sentiment is also much of the sentiment of Wall Street, which, in my opinion, is definitely erred to the side of bearishness. And you could also see this in sentiment surveys around the stock market. Okay, and so that's the bottom line. Man's very bearish, very, very bearish. So, which means, you know, might be an attractive time to maybe get a little hedges out there. If you're not hedged in your portfolio, maybe, you know, maybe look into a few hedging strategies. I did a whole 45 plus minute video in the private group recently, all about hedging strategies. If you want to apply to join in there, check out the description area. That'll be to apply to join in there. Covered, 4 huge hedging strategies. So maybe something to look at. I'm not scared of a crash scenario. I'm hedged. I'll make really, really good money in a very quick amount of time if that scenario did play out later this year. It's PayPal. This stock is at a 5-year low right now. This stock is down almost 19% from where it was 5 years ago. Now, why is this stock an easy money stock? It's got to be more than just, it's down from where it was 5 years ago. I'll show you exactly why, okay? First off, what has happened with their business over the past 5 years, right? Well, in 2018, right, which is what we're looking at here, they were doing about $15 billion of revenue roughly back then, okay? They're going to do about $30 billion of revenue this year. About $30 billion. So they've about 2x their business from where the stock price was when it was actually higher than where it is now, which is incredible, absolutely incredible to think about. Now, on a valuation front, this stock is dirt cheap. I mean, it's incredibly dirt cheap, okay? They're trading at a 2023 P ratio right now, expected here, of about 12 in the 12 to 13 range. For PayPal, you've got to be flipping my flapjacks. That's ridiculous, okay? Absolutely astronomically ridiculous. And I honestly think they could come in with big beats. I listened to the conference call, and based upon what they were talking about there, I'm like, I think this business is set up to be in a much better position, and I think they're going to have their net income expand much more rapidly and their EPS much more rapidly than their revenue. So basically, whatever they bring in for revenue, especially for this next 12 months, I think it's going to be small percentage compared to how much their EPS and net income is going to skyrocket on a year-over-year basis. So if anything, I wouldn't be surprised if they're a year ahead, where they do $5 something this year, and then they end up doing $6 and some change next year, okay, which puts the valuation obviously substantially lower from here. So it's a crazy value proposition. Now, you might say, well, has something happened with their business model where it's deteriorated and they're like done? Nope, and nope. Okay, we'll go into the numbers in just a moment. I'll show you that. But just looking at the Apple, this is the iOS Apple App Store, right? Number 2 and number 3 most popular apps on the Apple App Store, PayPal and Venmo. If you didn't know, Venmo is also owned by PayPal. Okay, so they're in a phenomenal position. Only thing more popular is what Square owns, which is called Cash App. Okay, Android, same exact situation. This is in the United States of America, by the way, I'm showing you. And PayPal and Venmo are successful outside the United States of America as well. I'm just showing you the U.S. market because that's the most important market for them, right? And PayPal, number 2, Venmo, number 3, most popular on Android when it comes to the finance category, right? So their business is certainly not like deteriorated or gone away or something like that, right? Now, some people say Square stock is overvalued. I beg to differ. Square stock is actually valued properly right now. These sorts of companies should trade at forward Ps in the 30s, okay? The market in general is going to trade at, say, 18 to 20, forward PE roughly, somewhere in there, maybe 15 if you're in a lower valued market at a particular time. So the fact that this stock's trading at a 30-something is valued properly. These sorts of business models should command that sort of valuation, right? Visa, for instance, which in my opinion is going to grow much less than PayPal over the coming years, Visa's valued at about a 27 forward P ratio, okay? Which I think is about right. That's about right for Visa. I wouldn't say Visa's undervalued. I wouldn't say Visa's overvalued. I'd say that's fair. And so you got to understand, when PayPal is trading at a forward P of 12, potentially 11, there's massive, epic upside in the stock, okay? PayPal needs to go up between 100 and 150% over the next 12 to 18 months to be valued properly, okay? 100 to 150%. Stocks don't trade at silly valuations for too long. And right now, this stock is trading at an absolutely silly valuation. It should not be. And that will correct itself, as the stock prices always do correct themselves. You can only trade at silly valuations on a low side or high side for so long, and it breaks. And that's exactly what I see playing out here with PayPal. Now, the CEO is leaving the company at the end of this year. So right now they're looking for a new CEO for the company, right? And they're doing that search right now. This is an overhang on the stock right now. This is a big overhang. Once that is announced, and especially if Wall Street likes a new incoming CEO, the stock's going to pop 20-30% in probably a month after like the new CEO is announced. And so when that happens, we'll have to see. But if Wall Street likes whoever they get here, and I think they'll be able to get somebody phenomenal.